So we have the power now to become debt free. We've got a visual gauge that's going to walk us through the whole process, and it's going to give us all the navigation, direction, the seeds. It's going to basically tap us on the shoulder and say, "Come on, man, pay that debt down." Diane Money, it's coming in to help us out. It's a powerful tool. Bill, during the break, we were talking a little bit about some of the things you can do with Diane Money. And I'm really fascinated by the way you guys thought this through. And I want to share a couple of things. You talked about some sliders. I'll get you to maybe give us some insight into that. But I can't emphasize the value and importance of being able to see your own behavior. So, as a consumer, someone who has debt, if you're thinking about that for yourself, imagine not trying to do it on your own. Imagine having the equivalent of a person in your back corner, someone, you're in the boxing ring fighting with the debt, and that you got a corner man that's telling you how to sidestep, what punches to do, what moves you need to make so you can win the fight. That's what Diane Money's doing for you. So tell us a little bit, Bill, about some of the opportunities that people have. They've entered a whole bunch of debt into the system. It's watching their budget come in. They want to look at it and say, okay, how could I improve my goal? It's giving them a visual roll up of how much debt they've got and what they're going to pay in interest or what they're going to pay in all that debt. Now they can start to say, okay, what if scenarios to really start moving the dial forward. Walk us through how that functions in the tool.
Yeah, let me give you a real life example of one of our users. I think this would be super helpful. So this lady, I'm going to keep her nameless at this point, no names, just for security purposes, but she had about $17,000 of credit card debt. And she came to us saying, I have no idea how to get out of this. This is just killing me financially. I'm stuck. And I think that's what the majority of people who are going to come to us are going to say, like, I'm stuck. I don't know where to start. Help. Show me what to do. And I'll do it. So when you sign up and you link your bank accounts, link your credit cards, and link your debt, what you see is literally a graph. And it's going to show you how long it's going to take you to get rid of your debt. And that's the scary part. If you just pay your minimums, your credit card won't be paid off on average for 20 to 30 years. It's an atrocity. The banks are making money hand over foot and you're losing money. So first and foremost, you want to stop using the credit card. I mean, from a habit standpoint, if you have a problem, put it away. Just like any other kind of problem, right? Stop doing it. But what you're able to do is when you use the subscription version is we have a slider on there that's so easy to use. It goes in $5 increments. So if you have an extra $25 a month to pay off your credit card, it's going to show you how much money you're going to save and how much quicker you're going to get rid of your credit card debt or your bad debt. So you have an interactive tool that shows you in real time, if you do this, you will have a better situation here. If you do this, you will have that. And again, it comes down to not adding more money to your credit card debt. That's the biggest thing. But every month you have a tool to show you what you can do. And it's going to help you prioritize things because this person had a wedding that they wanted to go to in Maui. So if you already have $17,000 of credit card debt, you want to go to your friend's wedding vacation, what do? So we also have a goals tab where we show you how much money you need to save every single month to get to your goal by a certain date. So it goes back to the original product, but it's tied in a much better way this time because you should have things to celebrate and should have things to do. For instance, if you want to get rid of your credit card debt, how are you going to celebrate? So once you pay off one of your credit cards, maybe you start saving and put it into that goal account. So that way you have money working for you both ways. You're saving and you're teaching yourself how to save. So that way, in the future, you don't go back to the credit card habit and you figure out, I'm going to spend the money when I have it, which is really the only way to go.
I mean, that's powerful. Again, it's interactive, and we can't understate the value of that enough. People are interacting with their money all the time, but they're not interacting with it in a positive way or in a visual way.
Yeah.
So you're bringing a combination of that positivity and visualization into the game. And although it might look a little bit bleak once you put the information in, the fact that you can now deal with it is the key. So,
Yeah,
when we first talked about this, you mentioned you were building a thing to help people with their goals and isolate them, but not everyone is clear on their goals. They don't know what they want, but they often have a better way of understanding or clarifying what they don't want. I've found that to be the case. And I look at it, okay, why don't you isolate and write down all the things you don't want? And then you can create a new column and you can say, what's the opposite of that? Right.
true.
And it sometimes it's just easier to think about those. So if you brain dump them onto a sheet of paper, and you can do this as an exercise as a viewer, and then write down beside it, okay, well, what are the wants? If this is the don't wants, here's the wants, and think about the opposite aspect. And so if you know that you don't want a bunch of bad debt and you don't want a bunch of debt payments walking out the door, never to be seen again, clearly you want the opposite of that. And so Diane Money is going to help you do it. So the goals tab is there. But I also love how, because you made it about really solving a problem, people know that they focus on the problem that they want to take care of. Goals being a little bit more nebulous, they don't know how to focus on those. So the tool's really doing both things. You're meeting that original objective, but you're doing it in a unique way, which I think is very powerful.
Thank you, my friend. They go hand in hand because once you get rid of the bad debt, what do you do with your money? And that's where saving, investing, infinite banking, whatever route you want to go, real estate, you have to have a destination for your money. It needs to have a home. And when you get rid of the debt, just imagine that if you're struggling with credit card debt, if you have 5 minutes to just silence your mind and breathe on it and think, okay, what would my life really look like if I didn't have to spend 4 grand a month on my credit card debt? Why was I so silly to do that? Stop beating yourself up over these things and start addressing them, because all progress starts when you tell yourself the
Truth.
truth. And Dan Sullivanism. And you just have to be honest with yourself and say, you know what? Something needs to change and you can do it. I have faith in you. This is just a really simple tool to use every month. It's going to show you what you need to do. So when you're able to go look back into your transactions for the past 3 months, most of the time we're seeing everything is pretty similar from a spending perspective. Sometimes it's going to be off a little bit. Your car goes out, you have something else, a big insurance payment come due. Things happen. It's life. It happens to all of us. So we need to get over those things. But when you see yourself doing the same thing month over month, I mean, Richard, you know this. If you could stop $500 of like outgoing money, that may be your ticket. And we show you where you're spending your money. So you don't have to do the work. You don't have to nitpick through every single transaction. It's going to be there for you. And then you can make better decisions moving forward. So that may be your ticket out of debt in and of itself, is just understanding where your money is going.
A friend of mine, a real estate investor, she used to say that the more you manage your money, the more money you have to manage.
Yeah.
And I mean, it's real simple. Now, with that in mind, something that comes up for me as I think about this is something I learned from my mentor, Nelson Nash. And he really talked in his book, Becoming Your Own Banker, about the power and the awareness that people need to have about interest volume. People get really focused on rates, and all the conversations around the water cooler at work are all about the rates, the rate we're going to get in return, the rate we're going to pay out on this. All these things are rate focused, but percentages on their own are actually very deceiving. And I feel like they put people sometimes in a mental prison. Whereas volume is really about, what's the physical amount of money that's going to come into your hands and then leave your hands never to be seen again. So it's
Right.
about the dollars, not about the percentage. And an example of that often is like the mortgage. And people, a lot of people want to pay off their mortgage, which is absolutely great. And there's a lot of huge advantages to doing that. But they focus on the interest rate. Whereas, what they don't realize is often people are moving across town. You have to upgrade the house. You had another baby. You need the garage. You got to relocate it. So on average, every 5 to 7 years, the average North American is picking up and moving, or they're refinancing a property. And so they're taking the beginning part of the mortgage amortization and they're resetting it. So they're
Yep.
never actually getting a lot of headway there. Instead, they're paying the highest volume of interest, regardless of the rate, in that first 5 to 7 year period of time. And that can be really crushing over a lifespan. So, what are some thoughts that come up for you, Bill, as we talk that through?
So we have 5 investment properties. One of them's paid off. Three of them we turned into short-term rentals. One of them we still have a mortgage on. You're going to pay so much money in the first 15 years of interest, you almost pay for a second home. It's crazy. Now, we were all sold here in North America that mortgages are okay. It's how you do things. You don't pay for your house in cash. But you have to ask yourself who wins. And the people who win are the banks. So inevitably, you're paying 2 to 3 times the amount of the home over a 30-year period. And the thing that I don't necessarily agree with from a refinance standpoint is if you restart a 30-year program, because then you're repaying that interest for the 15 years and you're going to pay double almost if you don't pay that off sooner. Some of the tips and tricks is your mortgage payment is, let's say $1,000 a month. Let's keep it simple. If you send in $500 on the 15th and $500 on the 1st, you're going to pay off interest faster because money is being thrown at the debt quicker. You want to do that. Or pay off an extra payment every single year and you knock off something like 10 to 13 years of your mortgage just by sending in an extra monthly payment. All these little things become a math problem. You have to look at your amortization schedules. I've looked at it for every single house we purchased. Look at the debt amounts. You're paying pennies on the dollar for the first however many years whenever you make a mortgage payment. And here in America, the tax laws change for mortgage rate interest write-off. So debt is not good.